Hey guys, Shannon Robnett with the Real Estate Rundown. And today I have on the show Ryan Dumas. Ryan is from Clearwater, Florida. He's got over 25 years in the hospitality industry. He's been involved in apartments, hotel, assisted living, self-storage for acquisition, refinance, and investing. I tell you what, this guy's done about $135 million in loans just in the last couple of years. But he's not just in the finance. Ryan is also involved in the upfitting and conversion of hotels. The guy's involved in investment groups, in partnerships, in JVs. The guy's all over the place. And so I really wanted to have him on the show because, as I understand it, Ryan, your main focus right now, as we get into this multifamily space, as we get into the self-storage space, your main focus is as a lender. Is that right?
Correct.
Okay. So what I want to talk about is I want to talk about what everybody wants to know about right now. And that is, what is SBA doing for the individual, for the business owner? What is coming down the pipeline?
So, I'm going to talk about a couple of different things here. Thanks for having me. Ryan Dumas. I live in Clearwater, Florida, travel all over the United States. I'm actually known as the traveling commercial finance guy too. So, but we're doing a lot of, excuse my phone, I'm getting a lot of calls in, but we're doing a lot of the disaster loans, which is called EIDL. I'm going to touch on the PPP loans, and I'm going to touch on a couple other things here right now about lending itself right now. So I'm just going to start off with the disaster loans. The disaster loans is for small business. If you don't know small business, look up SBA and kind of get the determination. But anybody that, it doesn't matter what loan you have now. You could have a small business, a owner finance. As long as you have an LLC, a corporation, you can get up to $2 million max on a loan. It's the disaster loan again. And I'm going to tell you the terms, rate, amortization. It's a 30-year fixed, 30-year amortization, 3.75% fixed, no prepay penalty. You could pay that off in a year, 2 years. That is backed by SBA. So if you do have a 5 million eligibility and it is full, don't worry, they've increased it to $10 million. But that increase to 10 million is not with financing, acquisition or refinancing another asset. It's just to include the disaster loan and PPP. PPP is the payroll protection program. So on the EIDL disaster loan, 2 million is the max. Okay. So they're doing up to, and it's not 50%, it's up to 50% of gross revenue. So if you have a management company, if you have a hotel, if you have a multifamily business, whatever that business is, a restaurant, you can get up to 50% of gross revenues. SBA is looking at directly. You can look at you can talk to a SBA directly, or you can send information into myself. I can give the information later, or another advisor, broker relations to SBA. So if your gross revenues are $1 million a year, they're going to look at the last 12 months revenue, you get up to 50%. So it's up to 500,000. SBA is going to make the judgment. They're going to look at your payments. They're going to look at how your business is now since COVID-19. They're going to look at, your market. They're going to look at risk. So if they think that you can't make the payments starting in January of 2021 is when those payments will start. If they don't think you can make those payments on that, they're going to give you the payment that they think in their calculations. If they think that $200,000 is a good figure, that's what they're going to come up with. So most of the ones that I've seen so far are getting approved disaster loans again, between 25 and 50% of gross revenues.
What is the criteria that they're looking at? I mean, let's pick a restaurant, okay? And we've got a restaurant that the guy did, $3 million worth of sales, so he was doing about $300,000 a month. He's doing good sales. When you're talking gross revenue, he had $3 million in sales. They're not looking at what his cost of goods sold or what his rent is, what anything is. They're looking at what his bottom line net was and what his gross revenues were?
Correct. And that's like in their formula. They haven't exactly told us their formula of what cost of goods are and everything else of what they're looking at, because some businesses do not have any cost of goods at all, like a hotelier, unless they have a vending machine or they're selling any food. But they're mainly looking at the cost of the gross revenue. And they're going from there because their way of thinking at it is that you're losing 6 months of business. So they're giving you roughly a loan roughly of up to that 6 months in business.
Wow.
And then going from there and seeing if you can make the payments for it.
Sure.
So it's pretty good. I mean, and there are, I'm going to get into some things that you can pay on and you cannot use on for this loan. First of all, on this loan, they just changed this, I believe it was 3 days ago. They changed where you now are getting a $10,000 advancement for each borrowing entity for the disaster loan you fill out. If you have not filled that out yet and you did your disaster loan, go on the SBA.gov site and fill out that. They might have you fill out an application again. Just do it again. That's what they're telling us to do too. And you put your routing number, your account number in there for your business account number, business account. And for each one, you get $10,000. Wow. It's an advancement, but it's turning into a grant that you do not have to pay back if you get declined on this loan or if you get approved for X amount of dollars.
That's fantastic.
So I'd advise to do it.
Yeah.
You know, if you qualify. I mean, I don't know if you don't qualify for SBA or this loan at all, but they said if you decline, they're telling us that you get that $10,000. I would advise doing that. Also for the disaster loan, a lot of people are thinking here too, and our company is doing a large webinar, a podcast. We have a go-to meeting. I believe it's 2:00 today. I got to check again. But if anybody wants that information, I can post that. We're going over the exact differences of PPP and the disaster loan. A lot of large hotel firms and companies were answering questions about it and giving the wrong information out on this.
Okay.
So people were saying that you can't do EIDL and PPP, the Payroll Protection Program. Both, you can do that. I'll clear that up. A lot of people have been saying that you cannot do both programs. You can apply for both and you can get funded for both. They will see that you're doing both the programs. And if you're getting an extreme amount of money, they might reduce that money in there, but you will get approved for both.
Okay.
I mean, you get approved for both. Sorry.
Right.
I can't guarantee you are. Anyway, so EIDL, I went over most of those things on there. I'm going to go over a couple of things here real quick. On the EIDL, disaster cannot use that money they give you on that loan to refinance, pay off high debt. You can't use it for another entity. It's for that business, paying those bills, paying those mortgages if your lender, owner, finance did not give you any deferred payments or any forgiveness at all. It's to pay those the rent, insurance, any payroll that you have if you're not doing the payroll program, any bills, electric bills, anything you have, you can't pay right now because of your restaurant, hotel, whatever that asset, whatever that business is. That's the main thing. I know a lot of people are going to be wanting to put that money in there, but pay those bills with it. Get that small 3.75% interest rate loan. The approval should be around 7 to 10 days. I can't guarantee that. That's what SBA is saying. They are very busy. We put in a deal yesterday, and then about 30, 40 minutes later, put in another disaster loan, and we were 4,000 people back. So I can tell you right now, they are very busy. From
one that you put in 30 minutes before, there was 4,000 submitted in between.
Yeah, so you can say 8,000 an hour, I'm guessing. I mean, and that was yesterday. Yeah,
well,
crazy.
and we know how good government is at getting stuff through the pipeline, right? I mean, hopefully we got people on that. But the good news is there's people that are looking for jobs, so we should be able to fill some holes there.
I mean, I don't know if they're really doing anything with those 4,000 that just happened in half an hour yet, but so yeah, they're in about 7 to 10 days they should be working on approval. And this process has changed 3 times. So we're on our 4th version of the EIDL. So some people, it's kind of funny. Some people have said, hey, they gave me a number. They said that they're working on my loan. It's different. It's very unorganized, but the thing about it is they want to get this money out. They want to start these loans as fast as possible. So instead of waiting a week, 2 weeks to get all the standard operating procedures and the processes all finalized, they just kind of put some information out there. So 7 to 10 days, you should get an approval. I can guarantee you that it's been about 10 days on a couple that I've heard so far. And I know I have a couple people around 11, 12 days.
So do you have any firsthand knowledge of any that have been approved?
Yes, I have a couple of them that we have that got approved for One was around 25% of the gross revenues, and a couple other one were between 30 something and about 50% gross revenue. So
That's
from
awesome.
the small sample, I can kind of say that it's between 25 and 50% of the gross revenue as of
Wow.
right now.
I mean, if they're processing 8,000 an hour and you actually have firsthand knowledge of a couple getting through the gate, that is incredibly incredibly good news.
Correct. It is. And I mean, I don't know if you are working on these right now, but of course, I guarantee there's a lot of people that are working on these, hopefully remotely, I can
Yeah.
say from the SBA. But, but yeah, it's one of those things that most of these disaster loans, everybody knows, is usually from a hurricane, a tornado that hits like 2 zip codes, 4 or 5 zip codes. But I mean, they have the whole nation right now
Right.
going through this. So the first couple of days of disaster loan, it was a wreck. Servers were crashing. People were like, "Hey, I can't get in. I can't get through the number. I'm emailing." So it's been a disaster. But I'm just going to clear up a couple of things on here. I mean, especially with the PPP that I'll get into. People that maybe have heard this stuff a week ago, especially on the PPP, that wasn't finalized yet. And again, I'm going to say the PPP is the Payroll Protection Program, and it's all out by the SBA, the Senate, the House of Representatives, and the President signed these. So they went through the process, but SBA has to go through their process and procedures as well. So on the PPP, they had implemented some things about a week ago. People were sending out messages, real estate brokers, hotel organizations, people that were sending stuff out. As of last night and this morning, those things changed. So we were trying to wait. Like I said, I work for GRP Capital. We like to give information out when it's finalized. Of course, some things change, but we like to get them out when they finalize, not, hey, the rate's up to 4%. Hey, the rate's 0.5. Hey, it's 1%. When the loan, the didn't even come out yet. So pretty much today you can start submitting those PPP loans, those applications. So what they're doing is they're giving 2.5 months of your average monthly payroll from 2019. If your payroll comes out for the month for $10,000, you'll roughly get a check or a wire for about $25,000.
Are
So I
there
mean,
loan origination fees with this? Are people having to pay up front? What are some of the things to look for that will let you know that you're not working with a reputable lender on this?
Yeah, I mean, I would recommend on this to work with a bank or a advisor like us that works with SBA and knows how to work with SBA. Also, one thing about this, a lot of people reaching out to their local banks, their lenders. I'm going to touch on this. The rate for this loan was 4%. And then it went to 0.5%, I believe right now, because they're finalizing some stuff since last night, about 1% on this loan. So most banks at 0.5%, 1% don't really want to mess with that. They're not really getting they're not making much money on it. Sometimes it's not worth their time. So a buddy of mine called up about 7 or 8 banks, and they're like, man, nobody's wanting to work on this and everything. So I said, listen, instead of wasting your time, come to us. We're not charging any fee on this. I don't know the exact numbers, but I know the government's paying the bank. I think it's like 3 or 5%, and the bank will share something with us. But what we want to do is help out as many owners as investors as we can to get this PPP protection program so they can start getting paid. They can keep their workers, their payroll, their salaries, because it's going to keep those jobs. Sidetrack again. I mean, there's also, I mean, I have hotel owners or some restaurant owners that only pay, between $8-10 an hour, depends on where minimum wage is in the country. And it's another problem here too, that don't mean to get sidetracked, but they're already having a problem this last week, 2 weeks. They don't want to come back to work because they found out they're getting paid $600 a week for unemployment now. If they're making $400 or $500 a week, what is it for them? There's a few different things going on. I'm back again. I'm just going to tell that you can get these disaster loans, and you can, if you're, by SBA rules and regulations, if you're, if you can get them, you can apply for both, and you can receive the PPP loan as well. I know there's a lot of misconception about that. I'm going to go over the PPP loan real quick. Is that all right?
Yeah, no, we want the information, and you got it. So we want to hear about it.
On the PPP loan, I know the main thing is it's 2.5 times your average payroll. you have to give them your 2019 payroll summary from ADP or whoever your payroll company is. A few questions on there answered on our form. And then we have a 2019 P&L that we'll need and a 2018 tax return. If somebody bought a business recently, we are going to go over some more questions on a go-to meeting that we have, and I will give it to him, give it to Shannon at the end of this call and everything else too. So it's going to answer more questions because it is new. I don't want to give out certain information that I don't know or that was changed since last night that we didn't go over yet. But we want to give out valid information that's true. So if anybody has any questions, they can give me a call or ask me. PPP is going to be forgiven. So when you have that 2.5 times your payroll, you are not going to be paying that. There's no loan for that. You are going to be forgiven on that grant, as you want to call that. That's what it's going to be. The PPP is funding as of right now. It's going to be funding in 3 to 5 business days. So as of right now, I think I got about 35 PPP applications that we have sent in, and they are a little different than people were sending out last week and 2 weeks ago prematurely. So I can send those out to anybody that has any questions. We have no charge in that at all. Like I said, the bank gets paid a portion. You know, they're going to help us out something, whatever it is. But we can help out on that, and it funds in 3 to 5 days. Pretty easy. About 15 questions in there, 3 documents that I went over. There is no guarantee fee on the PPP. So if you're looking about, if you don't like the guarantee, there's no guarantee fee or a guarantee on that. Most SBAs have guarantees. People have a lot of questions about that. The first one, the Disaster Act, will have a guarantee on that. What is that?
Because the
PPP,
disaster loan is not necessarily guaranteed to be forgiven, but and so they want to guarantee that you're going to be making those payments because they're structuring that over a distance of time to allow you to keep your business going.
Correct.
Payroll
Yep.
is for you to continue to pay your people. That's more of an immediate relief, and there's a really good indication that will turn into a grant and go away.
Correct. 100% correct.
Okay, awesome.
So go ahead.
No, I just wanted to make sure that the listeners understood that why the first one was asking for a guarantee and the second one necessarily wasn't. Ryan, that's all really great information on the PPP. You know, and I want people to remember back to when the government was rolling out health insurance. It doesn't matter what side of the aisle you tend to vote from. We all knew that the government was rolling out a health insurance plan that then had to get turned in to a functioning thing from a law. And I think people need to understand that this is kind of the same thing, that Congress passed it and they said we're going to do it. But if everybody remembers, it took 6 months to roll out the website for the healthcare that the government was offering. You know, people need to be a little bit compassionate of what you guys have been going through, jumping through hoops and changing regulations. And then we want you to use this form or that form, or what form are we using? You know, guys like you in the front lines. I mean, you know, we were talking before we turned the camera on that, man, you've been putting in some long 12 and 15-hour days trying to get up to speed on this so that you can help people. And it seems like every time you turn around, it's changing, but that's not something that you're doing. That's not something that your industry is doing. That's just trying to figure out, like you said, between the government and SBA, what's really happening between what the lawmakers said and how it actually gets handed out to the people.
That is 100% correct. And when people talk about something, of course, when it's in a disaster and everybody's, you know, kind of freak and frenzy, and you touch base on what I talked about earlier, you got certain people of certain jobs that aren't into financing. They're like, oh no, we're gonna get 4% rate. Oh, we can't get loans, or we can't get any money, or we're not gonna get approved. And you know, it's like the best thing to do is ask a professional in that field, what is the truth, what's going on, and everything else, because some people jump to conclusions, and there's no reason to freak out. I mean, yeah, there's a you know, pandemic going on right now and everything else. We do have to be careful. We have to watch what we're doing. We have to be social distancing. Everybody's different on that. Everybody's got different stances on that too. That's a different topic, but you know, it's all about, you know, risk, you know, relationship, and doing things the correct way, and getting through these storms. If anybody has any questions about financing, you don't ask your commercial, you know, real estate broker, or your, you know, sometimes the accountants know or the attorneys know. but you got to make sure they're up to date on it, because they looked at it a week ago when it's SBA and they're rolling it out on a Friday as of today. Last Friday or Monday, a lot of things have changed. It's
Yeah.
nothing bad about anybody else's field. I love people. I love to help out others. That's why I've been working for the same company for almost 4 years. I've been doing the financing for almost 8 years. I love it. I love my hoteliers, the apartment, restaurant owners. I love dealing with it. But make sure you get factual information. I can go over a couple of things what the PPP includes that the disaster loan doesn't on some of those things, but just make sure you're doing things the correct way. Don't go out and get another loan. Don't go start paying things off. Ask before you start doing it, because it is SBA. SBA is, it's government loan, government funding. You want to do things the correct way. If they give you a loan, they say, hey, you got to use it for payroll and utilities and mortgage interest and employee salaries. And you go out and you buy another restaurant, or you pay off your 12% debt from your hard money guy. You just want to be careful with that.
No, that's true. You don't go to your accountant to get your tires changed and your car worked on. Make sure that you're getting your information from the right people. And Ryan, that brings me to another point I want to talk about, kind of shifting a little bit. We're hearing, I mean, in for weeks and weeks, well, 2 weeks, we've heard, everybody talking about tenants not paying rent and things going south and nobody's going to pay their bills. And several hundred units that we have, I believe we've had 3 people approach us, and we took an early and often approach to communication with them about our willingness to work with them. But, for those people that are worried about, foreclosure, you've been in lending. I mean, explain to us a little bit what that foreclosure process looks like if in April, we're not able to make the full payment. I mean, just walk through that scenario, because as you just mentioned, you talk to your lender about all things lending. Walk us through that a little bit.
Well, I'm going to talk about a few things. I mean, I've been in the commercial industry for 8 years for the financing. So I wasn't in the middle of the 08, 09, but I was, in the residential side
Oh,
with,
darn, you missed
owning,
it.
yeah, so owning my house. But I mean, I can tell you the best thing. I mean, because I've had clients that have had, bankruptcies, foreclosures, and like, oh, you had that 08, 09. Oh, that's no problem. That's been a while. It's been 10 years or more. Let's go ahead and get you our loan. But the main thing is, before you contact a lawyer and say, hey, I'm having trouble paying these bills, look at other ways to do it. And I mean, I don't know how far you are behind. When this happened 2 weeks ago, I'm pretty big on Facebook, and I've known hoteliers for 8+. So I mean, there's probably about between 5,000 and 6,000 hoteliers that I know personally, which is a good bit. So they'll come up to me and they'll go, hey Ryan, what do I do about this? I'm like, okay, call your lender. Well, it's a private guy. I'm like, call them, ask them, can you defer me for 3 months on my whole payment? Keep it at the back end, whatever you want to do it. And what if they won't do that? I'm like, ask them for 1 month. What if they can't do that? Ask them for interest only for 3 months. So those are some of the things that you do, no matter if it's a COVID virus or what it is exactly that you're having bad payments. If it's just bad business, but if the economy is going bad, you're in a recession, depression, ask your bank, talk to them, see if they can work with you. If it's a tenant, and you're working in a restaurant right now, and restaurants closed because of what's going on right now with the COVID-19. Hey, I'm pretty sure my restaurant's going to be closed for a good month. Or, hey, I am working the takeout. I'm making $50 a day, twice a week. That's pretty much getting me by on food. Can I make these payments to start and we come back up again and pay you the full payment and 10, 20% of the other month's rent? Can I get caught up? Some people are just like, oh, I'm just not going to get any money. I'm not going to have a job. And, they'll start blowing it. Just calm down, be patient, think about your situation. A lot of landlords will work with you. And, if they won't work with you and there's nothing there, think about your situation, seeing if you're getting your unemployment money, and try to get caught up.
Well, Ryan, you mentioned that you weren't involved in 08 and 09, that meltdown. I know that a lot of us that were, it started out that people didn't want to work together on stuff, but then we realized we were all in this together. And by the time we got to the bottom in 10, people are a lot more amicable on working together. And I think we still have enough of a memory in our society of what's coming that I believe that you're going to find a lot more people are willing to work with you, because for a bank to do a foreclosure action, not only does it take time, it costs money. and it puts a product back into the marketplace that definitely needs to be needed, but the bank still has to go through that process, and that doesn't look good for the bank. It doesn't look good for the borrower. And reaching out to the bank and asking them, hey, can you help me? I think everybody is realizing right now this isn't something that you caused.
So I mean, like you said, I mean, banks look at risk.
Yeah.
All they want you to do is make the payments. They could care less. They don't want your asset. Now, I mean, there's different lenders now. I can kind of get to that. If it's SBA and they have a 90% loan to value, they don't want your business. If you have a company and it's a local bank and they got 50% loan to value and it's worth $5 million and you only owe 2.5, they might want your business.
Yeah.
I mean, I've seen that before, but so I mean, it's different stories. I mean, but going through the process, it's a pain. It is. But
Right.
most of the banks just want you to make your payments. If you can find a way to make your payment that makes sense, that's the best way to do it. But right now it's hard. Not even going to get into it. But in the CMBS market, the securitized money is very, very hard, and they have stipulations where they can't get a second loan by SBA. They can only get a mezzanine or hard money loan, and those are 8, 9, 10, 11% rates.
Yeah.
So it's very hard, but if I can, can I touch on some people that are wanting to purchase and refi right now?
Yeah.
A little bit
No,
of basics.
we're all about real estate. We're all about lending, and it's all about you. So take it away.
So, I mean, most of the stuff we do real quick is about $1 million and up. I mean, we've done some stuff that's 800, 900,000. It's because of our lenders are national lenders. We work with a very few SBA, very few, CMBS lenders, very few, Fannie, Freddie. And then we have some bridge lenders in there too. And I did probably forget, but USDA, we do some 504 SBA 504 green programs too. But the main thing is right now that you just got to realize through this COVID-19 that there's a disaster. There's things that need to be done right now. There's a lot of people that are trying to buy another asset that might not be hurt right now, or they're trying to go from owner finance or lease to an SBA or a conventional. I just tell you, I mean, just kind of be patient. The rates are low right now, but they will be going up a little bit. But bear with us here for a little bit because we're doing disaster loans, PPP right now. So the best thing to do is wait, a few more weeks. Wait till the economy starts bouncing up and we go down on this curve from the COVID-19. Once they do that, the lenders can see, where you're stabilized at, where you're getting ready to go for your stabilization period of, if you're going to make it or not. Because if they want to refinance your property and you're a restaurant, you're not open up yet, it's just going to waste, my time when I could be helping people out with the disaster loan and the PPP, grants.
No, that's a great point.
So, I mean, now if you have, and I have these scenarios, so say somebody has a conventional, it's a hotel gas station, it's a conventional with a 15-year amortization, 6% rate. If I can get you a 4.5% rate right now, SBA, and do a 25-year amortization, and your bank's not helping you out, and you might be going into, bankruptcy, foreclosure in a few months, you don't see the end, and you got a good debt cover ratio, 1.35, 1.4, whatever it is. I am working with one right now that's got a 2 debt cover ratio. It's a hotel. And we're going to put that in an SBA loan real quick. We have a lender that's working on that. They're not doing bad business right now at all, and they're not being hurt real bad in this at all. They have a lot of extended stay and some contractors staying at their hotel. I think it's like a 60% occupancy, so they're doing well. So we're going to refinance that here soon. But I would say, just being a guess, there's probably I'd say about 2% of the banks that are lending right now.
Yeah.
So, I mean, just be cautious, give us a little bit of time. If you do need to work on disaster to get out of this, the PPP, the disaster loans, let us know. If you're hurting on a refi and it makes sense to change them, if you're just trying to save like a half point, the business is doing all right, or it's a projection loan, let's just wait a couple of weeks or a couple of months. We do have some projects that are, some lenders, some loans that are expiring or something like that. Bring it to our attention. Hey, our owner finance is expiring in 2 months, 3 months, and we need something here. Or we're getting an extra $200,000 break if we can get it financed right now. Tell us that right away. Don't tell me in a week or two. That tell us that now. So if we can help you out. But again, I work for GRP Capital in Fort Myers, Florida. We have an office in California. I'm in Clearwater, Florida, but I do travel a lot. I do a lot of multifamily conferences, about 4 to 6 a year. I speak at a lot of local ones, New Orleans, Florida, and different areas of Miami. I was supposed to go to next month, and then I'm going to one in Chattanooga. But let me know. I do a lot of hotel conferences. We're big in Asian American Hotel Owners Association for the last 8 years, and that's the one that I can share a go-to meeting that we're speaking at and going over the PPP and the disaster loans in a few hours today. So
That's great. Well, Ryan, I know you're busy, and I really do appreciate you spending some time with us this morning. I want to be able to I'll put your info out there so that people can get directly in contact with you, because I know that what you're doing is important, and I know that having the correct information is definitely going to make that job easier for yourself and the people needing the help. And so I really want to thank you for being on the Real Estate Rundown this morning. Again, Ryan Dumas out of Clearwater, Florida, with GAP Capital. Thanks again, guys, for joining us. We'll see you next time on the Real Estate Rundown.